Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 28th of July, 2020, just after 5 p.m. Central Time. Well, we're up in the stock market. We had a down day today, and I was looking for that. You know, if you read items like I do, I learned with this from the Stock Trader's Almanac about big up days on a Monday or down days on a Monday in stock indices, and now the tendency is to reverse that for the day on a Tuesday. That's all it's worth. Doesn't mean you're reversing a trend, and you pay attention to that. It's one of those high probabilities that you look for. Then you look at what the metals are doing, and they're strong. Now, the August gold I'm going to be dropping this week. For my paid subscribers, I'm already in December gold. So you'll see I'm following these there. For the public, I'll stay with the August. The dollar index still very weak. You can see the foreign currencies are opening tonight, stable to slightly lower. If you take a look at the energy complex, a little bit lower tonight. I viewed the API number that came out as friendly. The EIA is not forecast to even approach that. We had about a 5 million barrel draw, net draw. They're talking near zero in the EIA, so there's going to be a battle there. Bonds and notes are going to fight a big day tomorrow. Why? Well, tomorrow marks the second day of the Federal Open Market Committee meeting, which means at 1 o'clock Central Time, the FOMC will release their monetary policy statement. The algorithms will go crazy as it comes out, and they parse every word for changes, and they'll trade like mad. And then as the Fed chair at 1:30 takes the podium to again read the statement and then answer questions from reporters, the markets will do their thing again. Always remember the yin-yang. When Fed Chair Powell comes out and talks at 1:30 Central, 2:30 Eastern, you've got to consider what time it is in Asia and then in Europe. The easy part is Europe. The markets are basically closed. It's 6:30 to 8 o'clock, 7:30 at night in many of the countries there. They're not going to react much until they wake up in the morning. Got it? They're probably up watching it, the traders, but not in Asia. And when they wake up, they respond. So you get the yin-yang. You get our reaction, then you get the other markets coming in, and by the morning, you have an idea where you're at. Just be used to that. For the week, we're still up 13 points. We sort of stalled right here, but you're no longer in that correction mode. The market is certainly in a friendly mode. When you come to the daily bar chart, do you disagree we're just going sideways right now? And you're caught here. You've got a higher high, lower low. Not much I can do for you on that pattern because it's not a trend. It's a sideways mishmash. If the market drops, I'd look for the 18-day average to be the support in the market. Is there anything here right now at this chart pattern that can turn the market bullish? No. You need to create something different than this. Outside day up tomorrow, something, but you don't have it here. In terms of the Bollinger Bands, very quietly, this market's going sideways and getting much closer to this 18-day average, and it's going to be bordered for a while between 32.75, let's call it, and 31.26, the upper and lower Bollinger Bands, which will be strong resistance and support in the market. 95% of the time you trade within those bands. Momentum is pointing to the downside. So momentum down, the bias is up since you're over the 18-day average and you're not trending. Not much to do there. The NASDAQ closed under the 18-day average, so the bias is down, momentum is pointing down, and the swing line is down, lower highs, lower lows. This market has not hit a lower Bollinger Band since March. A sign of weakness would be hitting that number. Same in XLK, so for those of you that watch those different spiders, keep your eye on that. In the Dow, the market, as you can see, also hasn't hit a lower Bollinger Band. You have to go back to May. These are months, many months. If it hits it, it's a sign of weakness. But it has support right here at the 18 and the 200-day average. See that right through there? And you're in what I call that pipe, P-I-P-E, where the Bollinger Bands go totally sideways on you, just flatten out at very narrow points. And that keeps the market churning and really not trending until you eventually get a breakout of it. In the Russell, we had one of those pipes and we've widened out. Widened out enough where I can't call it a pipe truly anymore. I can say that you've widened out to a normal trading affair market more than anything. The momentum is down, the bias is up, and you're not trending as the swing line's got a higher high and a lower low. In the VIX, I was surprised the market was even down today with all the other indices down. I still feel the market is going to get back to the 18-day average of closes, but as each day goes by, that number's been falling. So when I think the pros first put on and wrote puts was here, you were at 27.33. Time decay takes and hurts the objective over time. So it's better for the writers when you immediately get to an objective if you're going to get there. Just because I say I think it's going to go there doesn't mean it's the way it is. Or is the market going to get back under these lows and negate that whole thing? Probably tomorrow is going to be a key day as we get the FOMC talk. In the bond market, we're still in an uptrend with higher lows, higher highs, but you're fighting a pretty good battle right here at the upper Bollinger Band with support at the 18-day average. In the 10-year note, this is that pipe again. Sideways action, you couldn't get me near it. I wouldn't put my enemy in something like that. Maybe I would. In the dollar index, you just keep sinking away. I think you can see that part of it. So as this market, it's called a gorilla glue trade. It just hangs on there. That is bearish as you can get. It gets just enough over it to alleviate pressure. Today you finished 93.64. So you're over the lower Bollinger Band. You're not getting excessive, but you're staying right on it. Just a sign of more weakness. What do you do in the euro? You pull to the right-hand side, so you're not staying over that band excessively. Still a bullish sign. Yeah, there'll be corrections along the way. Nothing goes in a straight line forever. But so far, until it's over, it ain't over. And we've had a breakout to the upside of sorts in the yen. I think many traders will argue this is a base. It probably has to do with COVID-19 and all the outbreaks we're seeing again. And they're there. They're in Asia, they're in Europe again, they're certainly in the US. And I think traders are nervous about that. This can all come crashing back into the Bollinger Bands tomorrow on ease with the FOMC. In Bitcoin, you've had a breakout of the sideways action, and you can see how the market did its number. Now, it's ahead of itself because it's over the upper Bollinger Band, but it's still a very bullish chart. On the energy markets, you probably are going to make a run back up and try to get back to that 18-day average, which is around 231, where the market's just going to hang there, I would assume, for a little bit. And when you look at the action in all the energies except nat gas, they're just in these pipes, and that is so hard to trade. In fact, I teach you stay away from them. Same thing here. Gasoline, it just messes your head up because you don't get follow through one way or the other. Nat gas isn't in it. It's in a short-term uptrend. I think the pros will be looking at the market at 180, 140. That is support, but you're overbought. Why would they buy in an overbought market? So I'm not looking for much of anything there. You know, one of the things I do is I put out for my ETF traders every afternoon a report. Now, futures traders, there are times when you should trade the ETFs over futures. An example, the silver market right now at a $4 an ounce range today. You do realize from high to low that it's $20,000 in the futures markets. Most of the traders I know can't withstand that kind of pressure. But you can step over to the ETFs and trade those in place of it. I'm not advocating it. I'm telling you what traders do. I prefer the futures because it's pure. The ETFs have rolls, other costs built into it. They're based on the futures. I find it easier to trade the futures. But I'm just saying that you've got choices. And with those choices, I review for you. So at 4:30 in the afternoon, I cover all these markets, and I've added BETZ, the betting online ETF. That is now in there. Cover all these markets with very specific buy here, sell there, do this. I promise you, what I said about the FOMC today, I said in that as well. Be cautious tomorrow. Don't be a hero in front of that. Let it come out. If you want to find out more, go to our website under the word research. It's all there for you. In the meantime, I'm Ira Epstein. You have a great day, and I will see you all tomorrow.